Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be taking a look at my options trading accounts and going over 3 trading mistakes that I've been making and that you can avoid. These are all things that have definitely happened to me, and so hopefully by sharing them, you will be able to avoid some of those mistakes. So firstly, we're just going to take a look at my options account with Robinhood. So if we hop into the computer screen here, we can see right now it's at $3,400, 3482, almost at 3,500. But if we look, all time, it's down pretty bad. Basically, this used to be a dividend portfolio in Robinhood, and then I kind of restarted with $5,000 at the beginning of, February. So February 1st, 2021 is when I started trading options, and it was going pretty well. Got the account up above $6,000, and since then, I'm down close to 50% at this point from highs. I was definitely down 50% from my highs, down below 3,000 at one point. So it's definitely been a big journey, and so far at least I've lost a lot of money, and hopefully I can make some of that back. But I've definitely learned a lot, and that's what I'm going to try to share in this video. If we kind of look into my spreadsheet right here, I'm kind of recording the weekly values. So you can see, I think I last made a video on this account sometime towards the end of May. So the account was around $3,500, really a similar value, and I got up above 4,000 and then really dropped back down again and had some bad weeks there and have really been recovering slowly since then. So if we look over here into the months, we can see April and June were pretty bad. April realized $440 loss. June realized $780 loss. May was decent, realized about $400 of a gain. But in general, I'm hoping to make these months more steady, just incremental gains, not looking for as much premium now. And we can see in 2022, I realized $2,900 of loss, which is pretty spectacular given, that my account really only started with $5,000 in February of 2021. So going now towards the mistakes that I've made trading options. The first one is just trading options on stocks that I'm really not interested in owning. So 2 of the big stocks that booked a lot of losses for me in the first half of 2022 was PayPal and Square. And these are companies that in general I believe in, and in general I think the prices that I was selling these options at were good prices. But again, there's not really stocks I really want to be a part of that much. And with PayPal and Square, I was trading spreads on them, which basically allows me to be a part of those stocks even though my account value is pretty low. So for options, you need basically 100 times the share value. So PayPal and Square, are in the 60, 70, 80, $90 range. So I would need $6,000 or $9,000 to sell puts on those stocks. And so with spreads, I can risk $500 to do that, and get less gains obviously, but there's definitely more risk for loss with spreads. And so in general, I think just focusing on stocks that you like, stocks that you want to own, is really a good thing. So I have been doing some spreads with more stable companies like Procter and Gamble, 3M, maybe some others, Home Depot, and those in general have worked fairly well for me. And it's just because I'm able to say, hey, these are good companies that first of all, I know more about those companies, so it allows me to have a little bit of an edge there, I would say. And I'm just more confident in them, and my emotions aren't as involved with those companies because of my confidence in those companies. And the next mistake that I have made is letting positions get too far in the money. So if you don't want to get assigned on a stock, then you shouldn't really let the position get too far in the money. And the reason for that is that it's hard to roll it out at that point to a further date or a lower price. And this is especially true with spreads. So if both the legs of your spread are in the money, it's really hard to roll it out for a net credit or really a profit per se. So that's one of the things that I struggled with is I had, spreads on Square that were, I think, at the 90 and 82.5 strikes. And Square was in like the 60s, low 70s, and at that point it's just so hard to roll it out for a profit. You can't really roll it out and get a credit at that point just because of some of the Greeks and how options work there. Unfortunately, you really just can't do that. So you really have to be careful there and make sure that if things are going in the money, you're either fine with getting assigned or you're going to do something about that position quickly to either roll it out or just take the loss. So that's the big tip I would give, is make sure that your positions don't get too far in the money. So the third mistake to avoid is the sunk cost fallacy. And basically what this means is that, you already feel invested in something, you've already spent time and money on that. So you're going to, risk more time and money and not have the guts, I guess, to cut your losses before they get even worse. So this is something that's definitely happened to me over the past few months. When I'm trading credit spreads, usually I start with a $5 spread. So that means the position's going to have a max risk of $500, which is the most I can lose. And usually you get somewhere between, for a $500 spread, you get between like $50 and $150 of credit. So at that point, your max loss is between $350 and $450. And what can happen is if your position is going against you, and like I said in the last mistake, if it's too far in the money to really roll it out for a net credit, then the thing you can do is you can widen that gap of the spread to maybe $7.50 between the strikes, and then you can get more credit and get a net credit. And the problem with that is that it increases your risk, and so you can potentially lose more. And that happened to me basically, is that the positions were going against me. It was too far in the money to really roll it for a credit with the same spread of $5, and so I expanded that to $7.50 in an effort to get more credit, and essentially those just kept going against me. And I should have just taken those losses before and realized that I don't want to own this stock. It's not a stock I'm super confident in. It's at a point where it's too far in the money that I can't roll it. So at that point, I think I should have just taken those losses and moved on to different positions and reevaluated my strategy at that point. So the sunk cost fallacy is something that can really hurt you, I think, and it's a great thing to understand and kind of get a handle on so that you can avoid doing that. So at this point, I'm kind of reevaluating my options strategies a little bit, definitely moving away from spread some back just towards puts, trying to find some stocks that aren't that expensive that I can sell puts on, that are high quality, that I would like owning. I have a few on that list, but it's not really a very large list, and that's one of my problems at this point. So stocks like Ford, AT&T, Store Capital, Leggett & Platt, stuff like that is what I'm looking to sell puts on at this point. I definitely think I would still dabble in a few spreads if I see a good opportunity and it's on more of a stable company like 3M, Procter & Gamble. I did a spread or two on Walmart and JP Morgan, stuff like that. But that would be, less prevalent in my trading. And so for now, I've just been doing puts and making a little bit of money. You're definitely not going to be making as much money selling puts on those lower volatility stocks. But for me at this point, I really don't need to be making tons of money in options. I just want to get a better understanding and confidence of options trading in general. And over time, as I'm able to add more capital to this account, which hopefully I will be able to do this fall, that'll make the process of selecting which stocks to sell puts on a little bit easier and will open my possibilities. So I hope this video was helpful. Those were 3 mistakes that I think have really hurt me over the past year. Let me know what you think of that down in the comments below. If you have any other tips or tricks for options trading that you want to share with me or other people in the community, I would love to hear that. And just want to thank everyone for sticking around to the end of the video. It really does mean a lot. And I will see you all in the next one.